Now, sir, there has been a lot of chatter about, what led to yesterday's fall. Some people have indicated that it was a rise in COVID cases in Kerala. Others attributed this fall to the rise in margins in the F&O segment. But in your mind, what is leading to this shakeout?
I would say a couple of things. One is that we shouldn't forget that we've had one of the best runs in recent times. And also it's a year end and a lot of, I would say, funds, they also close their books. So for them, it would definitely make sense to book profits and because the profits have also been sizable, because if you look across multi-caps, be the small cap, mid cap, large cap to a certain extent, so they've made substantial returns. So these funds would also, because the smart money, the savvy money, they would also like to book profits and put it on the books. So I think that's also what we are witnessing in terms of profit booking towards the year end. And also there are definitely some concerns not only in India but across the world that the markets have risen too far, because if you look at Nasdaq. Till day before yesterday, it was up almost 40%. Dow Jones was up almost 20%. So, and that also within a few months. So that clearly tells that the markets have run up too far and too fast. So there is time for consolidation. And those who thought that it's a good opportunity to book profits, they've looked at the markets to actually book profits and maybe look at entry at lower levels. As far as the macros are concerned, there's not much change there because it's not something which has triggered this major. It was more on expected lines only that there could be some profit booking, but the severity of the fall that we witnessed yesterday and today, that's quite sharp. But that's always okay. You can't help it. The markets are the way they are. We have to take that in the stride. So overall, we going forward, we'll have to see how the advanced decline trend behaves, how the all-time highs versus trend behave. These are two critical factors, because the macros in terms of rural prices, in terms of geopolitical tensions, there's nothing new about it. So I don't think those are factors. And also some cool off in the US rate cut is also expected next year, second half. So those things the markets have already discounted. So I would say more of profit booking and year-end closure. That's one of the major reasons for the markets to witness this sort of sell-off.
Right. And I mean, the headliners did correct, but it was the broader markets that took the real drubbing. Both mid cap and the small cap witnessed their second worst fall in percentage terms yesterday. So my question is, have the broader markets topped out given the kind of tremendous returns we have seen this year?
If I look at the small cap index has corrected. You rightly said it's corrected significantly, and there is a possibility that we could see a short-term top being formed. So this month also, the month closure is also going to be very, very important. But what we need to remember is that the trend still remains extremely strong on the upside. So any pullback, we'll have to watch out for whether it is really a change in trend or it is simply a pause or a consolidation or a profit booking with a long-term uptrend remaining intact. So because if I look at the small cap index, I see that there has been some sharp selling. But if I look at the longer term trend, that continues to be extremely strong. So that tells me that pullbacks would be used as buying opportunities unless we have some major negative trigger, which I really don't foresee, given the current global scenario as of today.
Good morning, Aamar. We talked about the broader markets. I'll just take you through what the sectors that led the fall, and leading them was Nifty Media, which fell 5.11%, followed by Nifty PSU banks, and we've been talking about their performance of late, which have done well, but they fell yesterday by as much as minus 4.04%, followed by Nifty Metal minus 3.82%, followed by Nifty Realty and Nifty Auto. Today, of course, Nifty Media has corrected a bit, so has Nifty Metal. Do you see an opportunity here for the investors? Any specific stocks that you would recommend or would like to look at also?
You rightly said that we are seeing across sell-off across sectors, and PSU definitely we are seeing some very sharp sell-off which has happened. But I would say that still among the large caps, SBI is one stock one can definitely look at on any correction. This is a stock one can definitely hold on to. Because if we see a major crack in SBI, then we could say that there's a change in trend, which is not happening as of now, because SBI is into currently it's around 630 odd levels. It has got very strong support base coming around the 550, 580 zone. So any further pullback in the stock, that could be a good level to entry. Whereas on the upside, yes, it seems to be capped around 630, 650 zone. But still, that's a good 15-20% opportunity one can have if we see any further correction in that. And for the trigger to happen, I would say the levels to watch out for would be 20,000, somewhere around 20,800. That's a very crucial zone. 20,700 to 20,800 on the Nifty. That's a very crucial support zone, because we did see some sharp correction yesterday and today. But we'll have to watch out for that, because that was the low that it had made on 13th of December. So that's a very crucial and critical level for Nifty. Having said that, I would say across the sectors, we are seeing some correction, and I would say that's a healthy sign, nothing much to worry, until we see a trend change. So if you ask me about Nifty, the trend, I would say now the trend is more or less consolidation. Still, you have to give the benefit to the bulls. Till we see Nifty closing below the 20,000, then 700, 20,800 levels, I would say it's more of that we could witness a pullback. But yes, one thing we definitely need to remember, that whenever the market, any market, irrespective of it being India or the US, sees such a sharp correction that we witnessed yesterday, after a major rally, that tends to become a short-term top for definite. So we'll have to watch out for that. So effectively, it means that higher levels would be sold into, and we could witness some consolidation. As far as the levels to look at, 20,700, 800, crucial zone for Nifty. On the upside, again, 21,500, 600, the high which it had made. That's going to be the zone of resistance. So it's more or less consolidation likely to happen. If we see some negative news flows coming from the US, then that could trigger some movement. Also, as you said earlier, that the US markets, Dow Jones, Nasdaq, all have witnessed some sort of sharp correction yesterday. So that tells me that profit booking is happening there as well.